Good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Friday, July 30th, 2021. And our top story today, affordable housing is disappearing. Well, joining me now to discuss this and a lot more, Deidre Woolard is the editor of MillionAcres.com. Deidre, great to see you. Thanks so much for joining us on the program today.
Great to be back. Thank you.
Yeah, let's jump right in because we're going to talk about trends. We're going to talk about affordable housing. Let's start with affordable housing. When last we spoke, and I think this is just consistently what we hear from experts, the demand for homes exceeding supply, driving those home sales up or those home prices up. I have some real questions about, I think a lot of people do, about whether or not housing will be affordable.
I think there's a lot to be worried about. We've had 112 months in a row of price gains. Median price of existing homes, according to NAR, was $363,000 in June. That's just incredible. That's over a 23% increase from a year ago. So we've got a lot of factors going on. The lower interest rates are making the affordability crisis not quite as acute. Inventory is still really low. It's below a 3-month supply, and houses are selling so fast that it really puts a lot of pressure on home buyers. And so the response for this is that we're seeing this massive increase in single family rentals, and the desire for them is really impacting the market as well.
Absolutely. Let's talk about affordable housing. First-time buyers, they're really getting, as you said, priced out of the market. A recent Fannie Mae survey said, I think back in June, that was a timeline, that 77% of people surveyed that this is the best time to sell. But I think the corollary to that, the real paradox here, I'm using big words, probably don't know what they mean, but I guess the opposite of that is that you're driving up price, but unless you're making globs and globs of money, getting that first home could be real challenging.
Well, and it's really created a situation where even if you are a seller and it's a great time to sell and you can make money on your house, where do you go? So that's part of the reason that people are just staying in their homes, and we're not seeing that inventory shift. We're seeing a little bit of hope. Inventory is increasing slightly, but not to the level that it needs to based on demand. And it's really putting so much pressure on buyers. And some of them are getting so stressed out. They're losing multiple offers. They're offering everything they can, waiving contingencies. And they get to the point where they just can't do it anymore. They get too emotionally worn out and too financially worn out.
Yeah, they get emotionally worn out. I'm emotionally worn out talking about this. Let's talk about the Federal Reserve and what they could do. Clearly, we've seen inflated prices, consumer prices like food, gasoline, acceleration there in inflation. Could be that the Federal Reserve begins to try to tamp down some of this monetary pressure, this inflationary pressure. Thoughts there about where this could go for mortgage rates?
Well, I think you've got some pretty cautious people between Powell and Yellen when it comes to thinking about interest rates. I don't think that they're going to rise precipitously. I think that, and right now we're starting to see a little bit more uncertainty with this Delta variant, which is also giving everyone a little bit of a pause, thinking about what a second lockdown could mean. So all of that is making things a little more uncertain than they were even 2 months ago. It still is likely that we're going to see some interest rate rising, but I still believe it's going to be very slow.
Deidre, when it comes to the supply of wood and other materials used in construction, when last we spoke about a month ago, still challenges in getting that wood. I know my father was having his deck repaired. There were some challenges, I think, getting some of the wood for that. Are we still seeing... Hi, Dad, by the way. Are we still seeing some construction challenges in terms of producing, I was going to say content, but producing buildings and producing new housing?
Absolutely. I mean, luckily, the prices of lumber have calmed down from that stratospheric high that we saw in the spring, but we're still seeing massive supply problems. Price of steel is also very high. But the commodities issue and the supply chain problems really haven't gone away. It's been over a year that we've been having these problems. You probably see it all over the place in stores with, certain grocery items, but it's also impacting the building of new homes. Some home builders are having to slow down simply because they can't get all of the supplies they need.
Yeah, and I think with this infrastructure bill, I know they've agreed to debate. Hey, great. That's another $2 trillion or so, give or take, added on top of what we've already produced during the pandemic, or what they've already printed during the pandemic to support things. Probably going to drive inflation up, I would think. Again, not an economist. Deidre, how do we make things more affordable? Let's talk about real estate investors. I know you and I have talked about converting office buildings or hotels that are no longer being used for those purposes to housing. But how do we get to this back to affordability for people like you and I and first-time buyers, kids out there, not kids, but younger people.
Younger people.
Than me.
Yeah, it's a really interesting problem. And the other thing, I mentioned that single-family rentals, there's a bias towards those right now, partly a post-pandemic effect of people wanting not to live in large buildings where there's shared amenities and things like that. So you've got this desire for single family, but you've also got a shortage in supply. And so in terms of building affordable housing, there's a lot of talk about modular construction, how to build faster, how to get away from stick built. It's been a debate for probably since, probably decades, but it really does need to happen. I feel like technology is getting to the point where we might be getting closer to that. So that's one thing to look for. The other thing is the impact of remote work. And what we're seeing is younger people who are looking for housing are just going further and further away from cities where things might be a little more expensive. And so that is another option as well, although who knows what happens with remote work. So that is a question mark.
Yeah, certainly a lot of unknowns. Deidre, I need to take a quick break, and I think you gave us a perfect segue. When we come back, we'll talk to Deidre about the commercial real estate market and then some trends that we might see, underscore might, for the remainder of 2021. You're going to want to stay tuned right here on BRN AM.
You need a financial plan that fits the way you want to live in retirement. A plan that can help grow and protect your money, now or in the future. With an annuity in your plan to help cover essential expenses, you'll have the freedom to live the retirement you want. This is what an annuity can do. Find the right financial professional to show you how. Learn more at protectedincome.org.
Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. We're talking to Deidre Woolard of millionacres.com. Deidre, thanks as always for staying with us this morning.
Thank you.
So let's talk about commercial real estate. And we kind of teased it, and you did a perfect segue without even me prompting you. Let's talk about commercial real estate. People still, from what I can tell and what I read, they want to work remotely. They're actually considering giving up their job and moving to another job if their employer forces them to work full-time at the office. What's this mean overall for commercial real estate in general?
It's having a big impact. So we've heard these terms, the great resignation or the big quit, which is really happening in a bunch of different sectors. We've seen retail workers quitting, we've seen restaurant workers quitting, but we've also seen a lot of office workers quitting if they can't have that flexibility. You know, they proved during the pandemic that they can work remotely. So for companies to take that away, a lot of people have changed their lives and their patterns of living and appreciate having an extra hour with their kids or even an extra hour to just be at home and not be commuting. So that's having a huge impact. Really, I'm thinking right now about the Delta variant too, and what that stress is putting on offices. I've seen some offices scale back their plans. A lot of offices were looking at that September 1st or October 1st as the time that they were going to require people to be in the office. Some are pushing that back now into 2022. So that is an impact that obviously has a huge impact on commercial real estate. The interesting thing that I'm thinking about is the longer this goes on, more and more of those office leases are going to expire. Those are traditionally longer term leases, but the companies that are making those decisions about whether or not to continue their lease are probably doing it 6 months to even a year in advance. And so many of them may be deciding to give up those leases. Still too early to tell, but it's definitely something I'm keeping an eye on.
And Deidre, kind of following that through, what does it mean for real estate investment trusts and for those pension funds, endowments, big asset pools that are investing in direct real estate? I guess it's a pause for concern.
It absolutely is a cause for concern. Certain aspects of office real estate are going to be fine. We've seen a massive uptick in life sciences research, things like that. But there is a concern. And, you know, going back to affordable housing, are we going to see more office conversions? That could be something that happens. But the good thing about it is that for companies that are coming back to work, the way that they think about office is profoundly different. And they're going to start allotting more space per worker, partly due to concerns of needing to be spread out. So I think that could help with some of that, but it absolutely is a concern for office. Office has been a wild card throughout this whole thing, and the new news on the Delta variant is just keeping things really uncertain.
Deidre, when we spoke a few months ago, you mentioned the server or data centers, I think, were a big source of income during the pandemic. Still for investors. REIT investors are actually direct real estate holders. Is that still the case? I would imagine that with this uncertainty, it just kind of continues to perpetuate the need for cloud computing, cybersecurity, hygiene and protocols to be put in place, and processes to governing work from home.
Absolutely. Data centers are still a great place to invest. We're only going to have the need for more and more of them in the short term. The other aspect, of course, is industrial real estate, and there's a lot of things pushing that as well. We talked earlier about the problem with supply chain. So we're seeing more companies be interested in either holding more goods in warehouses just in case there's a supply chain problem, or reshoring and bringing some of the manufacturing back to the U.S. or, you know, closer to cities where they have better control over things.
Deidre, you also mentioned kind of the migration, if you will, people moving out of the city. City typically, I always envisioned, like, you know, having been in New York City and some of the, you know, and Baltimore, now in Charlotte, you know, younger people tend to gravitate towards the city. That's where the opportunities are. but we've seen clear migration patterns. Are these permanent migration patterns, or once I don't know if you ever kick COVID. So let's be clear. I don't think maybe you don't kick it away. It's done completely. Maybe it's always there. But when things resume to some level of normalcy and we have people back in the office, do people come back, or is this generation gone and they're just going to live in the suburbs?
Entirely certain on that. If you had asked me this 2 months ago, I would have said everybody's going to go back to the city. New York's going to be open. It's going to be awesome. But with the Delta variant and with other problems, it's clear that COVID is going to be with us for a long time, and it's going to change the world in a lot of ways. And also the other thing is, while younger people do want to be together, they do want to do things together, we're also dealing with the digital generation that really grew up having a lot of their interaction be remote. They spend a lot of time, on, different platforms, interacting with each other, not in person, sometimes interacting with each other via phone, even when they are together. So you've really got a generation that's kind of okay with not being together as much as previous generations.
Last question, Deidre. You have a lot of real estate investors. I mean, millionacres.com, the whole thesis is around how to be a better real estate investor. What are people talking about on the platform, and what are they being advised of in terms of things they need to think about in the next few months for the remainder of 2021?
Well, we're obviously going to continue to see a need for housing. That is one of the biggest sectors that we're invested in, and one of the biggest sectors that I think a lot of different REITs and different pension funds are invested in. The need for housing isn't going to go away. We've got a larger and larger generations of people. Household formation keeps going up. So we're looking at that, looking also at industrial real estate, as I mentioned before, and how that continues to keep growing. The other thing is that we've seen Sunbelt migration. I would also keep an eye on the Midwest. Cities like Columbus, Pittsburgh, Kansas City, there's a little bit of a chase for affordability going on, and those cities are benefiting.
Well, I think we unpacked a lot here, lots to give the audience, whether they're an investor or a home buyer, lots to think about. Deidre, thanks so much for joining us on the program this morning, and we look forward to having you back on again very soon.
Fantastic. Thank you.
That wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the information in retirement, markets, technology, personal finance, so much more, check out today's edition of our daily newsletter, The Morning Pulse. We're back again tomorrow, this time for BRN Weekly. We'll have a very special guest. We'll take a look at some of our best segments for the week. So until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited, and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.